Welcome to the Physician Sense Podcast, a podcast designed specifically for physicians, offering a breakdown of complex financial topics to help you develop your financial IQ, further your financial journey, and improve your well-being. Whether you're a medical student, resident, fellow, or attending physician, you're sure to learn something new that will benefit your journey. And now your hosts, Chad Chubb and Tyler Olson.
Hey, this is Tyler and Chad. We're excited to keep talking about personal finance topics relevant to you physicians. And we're continuing our discussions around those topics relevant to new interns that are starting intern year this July. We have a couple things on that topic, but we're also going to be talking about something that will be relevant to you as you become eligible for moonlighting income. So that is highly unlikely to be for your intern year. For those of you who are later on in your training and for future use, we're going to be talking about how to manage moonlighting income and its related tax liabilities. But before that, we're going to talk about how to approach saving up an emergency fund and disability insurance decisions. And that will comprise our discussion today.
Yeah, important topics. I think one of the most important disability decisions actually will occur in your residency years or your largest opportunity for disability. So we'll get to that one. But let's start with another popular topic. Everyone loves the emergency fund. So let's start with the emergency fund, Tyler. I was actually interested to get your insights on the emergency fund because this is one of those ones where, you can do the old Google search, how much, and I think you see a lot of like 3 months this, 6 months that, but the number can range all over the place. What is your go-to on how much you should have? And even if you want to break it up, because I think there's going to be a different number while you're in training compared to, hey, you're an attending. When you're working with someone new or you're just kind of having that open-ended conversation, what numbers are you looking at? What kind of lines in the sand are there for your emergency funds?
I think it's important that this discussion embrace the reality of everyone's situation. It's going to vary widely. From my perspective, the emergency fund evolution for a person ranges from $1,000 to 12 months of expenses. But that high end of 12 months, I'm talking like years in the future of like post-training income. So that's not something to shoot for right now. But I pull all the way back to $1,000 because I suspect that like a resident, their ability to save is really going to depend on a lot of things. I mean, some people, they come from a family with lots of financial support, and being able to have $9,000, $10,000 in an emergency fund is something that they might already have. And then other people are coming from a place where they are going into debt just to move to get to their residency program. And so the idea of telling them like, well, you know what, your paycheck is about $3,900 a month and your living expenses are about $3,200 a month. So you need to work toward having about $9,600 or 3 months of expenses in emergency fund. So get to it. And they're like, yeah, but I've got like $12,000 in credit card debt, and I've got this private loan that I'm trying to figure out, and I have to pay for these licensing fees and all this stuff. And so I think that just coming at people with like this is what you need to have, we have to be careful. And you just have to, what I'm saying is that like, if you're watching or listening to this and you are in a situation where you had to get into debt just to move, you want to start with measurable and realistic goals. You want to evaluate how much debt you've got, right? Like, and what kind of debt you have, and then figure out, how do I prioritize paying off high interest debt versus saving cash, right? Because like 3 months of expenses, but you've got like $20,000 in credit card debt that's charging you 20%. That's not a good idea, right? Am I wrong?
That would be one that you want to probably put a little bit higher on that priority list. You got it.
Yeah. So what would you do? Like, what if you're an intern and you've got $15,000 in credit card debt and you got $500 in the checking account, and someone says, all right, you should start building an emergency fund. What would you tell them to do?
Yeah. I mean, in that example, I want to keep a little bit of buffer room in the checking account because I also think it's such a mental strain to ever have to worry about like a check bouncing or you swiping your debit card and it not work. So to me, always having that, peace of mind number in the checking account where you don't have to micromanage that. But yeah, in that example, like you might not have an emergency fund. And no matter how many blogs you read, don't let them shame you. Like, it's okay. Your situation is not this like cookie cutter model. That's my favorite part about financial planning. Like, Tyler, you probably say the same thing. Like, every day is a brand new case study sounds horrible because we're all working with humans, but like in the most simplest form, everyone is so unique and different that it is. All the data is new, all the family situation, all your goals, all your values. So, going back to your main question there, you might be in a situation where you can't build up an emergency fund. But I would still argue every time you make a payment towards that credit card, I hope it feels darn good. And it should, because that's still a win. I don't know if you have any magical investments that guarantee 15, 20%, Tyler. If they do, we need to talk after. But you got to think of it that way too. You're making these little strides. So I don't think you could have said it any better on no matter what you Google search, no matter what this blog post or this YouTube video said, your situation is your situation. And you might not be able to build up that emergency fund. But if you're still making proactive steps to work down that credit card debt, those are still victories and you're still really doing great things financially.
But now let's say we could fast forward a little bit to debt being paid off. Say you're, PGY 3, or say you're in the fortunate position that you don't have credit card debt going in intern year and you have a little bit of savings. You want to make sure that you have what you need for day-to-day, month-to-month living expenses, but then create a set amount of money that's like an expense that's going to go to a separate savings account. Do you agree with the concept that the emergency fund should not be in the checking account?
100%.
Because otherwise it's all just blended together.
Yeah. Well, my joke, I'll probably say it 1,000 times in our recordings together over the many decades that we'll produce this. If it sits in checking long enough, you will find something to spend it on. We're all humans. I don't care if you're a CFP, an MD, a D, you name it, you're going to use it. And that's why we always want to separate that. Even if it's just a simple form of, you're probably going to get much better yield, at least on a true savings account than you are your checking account. But yes, you don't need to create buckets for every single goal, but the emergency bucket should be its own separate bucket. 100%. I don't think anyone could sell me otherwise on that one.
Yeah. So if you're, if you've made a budget for your, based on your resident salary, any other household income, if you have a significant other who earns an income too, or if it's just you, whatever it is, that income minus your living expenses, can you carve out a set amount of money per month to dedicate toward your emergency fund? Say it's $100, $400, whatever it is, then automate that transfer. The moment your paycheck hits your checking account, boom, whatever that is, just send it off to Wealthfront High Yield Savings, Ally High Yield Savings, your Fidelity taxable brokerage account money market fund. Your best solution is get that money moved out. And then long-term goal. Yeah, 3 months of expenses, that's great. If you can make that a goal, I think it's important that you just take it steady, because you need to be able to make sure that you're being able to pay for what you need in life, and so if it's going to take you 2 years to get to your emergency fund goal, so be it. Just do something that is realistic and do it as consistently as your life will allow you to.
Yeah, we're really on that same side of it. Even one thing you can do on your pay stub, a lot of providers will allow you to even separate it. So like on your pay stub, you can say, hey, of my net number, I want the bulk of it to go to my primary checking, but I want 250 go right to my high yield savings. Or again, if you're you can automate that through your bank too, but that's one way where it actually technically never hits the checking, just in case. But that's another way you can add it in there. But while you're in training, we use very similar numbers. If you leave training with anywhere from $1,000 to $10,000 in emergency savings, you knocked it out of the park. You're well ahead of many. You have something there. If it's more than that, fantastic. We love it. If it's less than that, that's okay too, right? We're going to get through it. The big kid paychecks are around the corner. We're all right. We're going to get through this. But I usually say that 1 to 10. I traditionally won't plug in we like 3 months or 6 months or one of this or two of this. We really are just trying to kind of build up and get through that, which I always chuckle when we're building, or walking through budgeting for residents and fellows, because, all things considered, it is good income. It really is. We joked about this on our first episode. Like, it's not fair per hour by any means, but like, it's still good money to kind of move things around. And, if it's $100, $200, $300 per month that you're automating, I think that's a huge win. It's not really until your attending years where we build in I call them two different levels of emergency funds, where level one, I always call it your sleep number. Like, what's that number? You need to sign into your bank account and you say, okay, the proverbial crap could hit the fan and we're good. We're okay. I usually will say, again, in the attending status, we want eventually that number to be at least 20,000. But we have clients that'll say like 6 figures and multiples of 6 figures. Now, their plan looks good. I would say we don't want to make sure we're not missing out on any opportunity cost. And then after that, we get into what I call level 2. And that's the only one where I usually will use what I always call 6 months net income. So pretty much your main number take out what you pay to Uncle Sam and then use that number and multiply it by 6. But we're sprinkling this into a brokerage account. So at this point, we're probably, usually most of the time, we're like a 60-40 mix, kind of plugging in some municipal bonds, and we'll nerd out on all the investment stuff later. But it's not really until, even at that point, you're a couple years into attending, you've already built up a nice rainy day fund, a nice sleep number, as we call it, and then we build from there. So if you're watching this in terms of in your training years, a couple $100 here or there is a huge win, couple thousand by the time you're done with training, huge win there. But I think your guidelines match up very close to ours, especially in those training years.
Yeah. So in summary on this topic, just do the best you can. Evaluate your reality, set aside something that you can reasonably do, and then put it into action. And, whatever your best is, just be proud of that. You're just trying to tread water during this time. And that way, if something does happen where you have an emergency, don't feel bad about using the money. That's what it's for. The fact that you don't have to put it on a credit card and instead can dip into cash, that's a win. Obviously, you don't want emergencies to happen, but everybody has emergencies. They will come up in life. It is inevitable. And so you want to have an easy option to be able to protect yourself when those things happen, and you should feel good about that.
I chuckle there, Tyler, because the amount of times where clients have had something big come up, the AC, the water heater, something, and they're like, yeah, we paid for it. I'm like, your emergency fund's still like the $5,000 or the $10,000. Oh yeah, we put it on a credit card. I'm like, nope, missing the point here. Missing the point. The emergency fund was supposed to avoid the credit card, and then we'll rebuild the emergency fund. So let's scoot some buckets around here. Let's move that, pay off that credit card at 20%. So that's why I'm chuckling when you say that, because it's like they built this moat around it, and no one can get to it. Even in an emergency, what it was built for, we can't get to it. So it's okay to use it. And once you use it, you just refill it again. That's what it's there for. So that's why you give me a chuckle. And before we leave this topic, I know you noted a few in there, but we finally have some yield out there. You actually do get paid to have some money on the sidelines. What are some of your favorite places to park some cash?
It's my favorite is Fidelity. I like their taxable brokerage account, money market fund. Their default government money market fund, it's paying north of 5%, and it's not FDIC insured. But what I always tell people is that if 2008 teaches us anything, as far as the market crash itself, the Federal Reserve showed that they will do anything to preserve the money markets. And so as far as we can tell from a government management standpoint, I view money markets as safe, even though they're not FDIC insured. But, if you feel like I want my money in a bank that is FDIC insured, that's fine too. And then what you can do is my second options are Wealthfront and Ally. They each have high yield savings accounts. Wealthfront is higher than Ally, and so I guess that's my number 2. I don't know why they're so different. Actually, I don't really understand why they're so significantly different. If maybe Wealthfront just has economies of scale and they're to their advantage or something. Those are my options. How about you?
Yeah, I love Ally. I would say Ally is the place where you want to build you're building your entire banking system. You can have a nice savings account. You can add in some CDs. Ally is just a really good system. That I would say, not that our family has it all figured out, but the Chubb family uses Ally for all of our family banking. I love Ally Bank. I think the Fidelity money market is really good. When we have our client reviews right now, and with all of those, you're ranging anywhere from probably 4.5 to 5 and change. If you're listening to this and you're like, oh my goodness, Laurel Road's at 5, I'm only at 4.5 at Ally, I would not go chasing rates. Long as you're in that range and not at 0.03 at the local credit union, that's what we're trying to avoid here. You don't want to go chasing yields of that small. If you're in that 4 to 5 range, you're already in a really good spot.
Yeah. No, that's a good array. I know a lot of people that have Marcus too, and they like that. And I forgot about Laurel Road. I know that they do offer that. And if you have an account with them, you get a percent, like a 0.25% off on your interest rate or something like that.
Yeah, I think that's what they do on the student loan side.
Yeah. So yeah, those are great options. So yeah, just look at what, look at those options, what works best for you, and make a go of it. Let's talk about disability insurance. It's important, but it's complicated and expensive.
Yes.
Yeah. So I was even trying to figure out where to start with this, because I guess the thing that I commonly say when people say, should residents get disability insurance? Should they get their own? Because a lot of them, they have group coverage available to them, but should they get their own policy? And because it's expensive, and we've already talked about how it's challenging even to save an emergency fund. So what are we doing buying insurance? I say you should get coverage as soon as you can reasonably afford it, and that's going to vary by person. So, and the reason for it is because what is the what is a greater killer to a financial plan than a loss of income, right? So do you, though, like, we probably have to talk about this another time. There's been a lot of, I've noticed a lot of discussion online recently about the viability of disability insurance for a non-proceduralist, whether it's as important, but I don't know if we should delve into that right now.
Yeah, we could probably build on that one. And maybe that's one of the ones that we get into, and we'll, obviously the beauty of Tyler and I, we don't sell any products. So we can talk openly about these things because we bring in other professionals. So it kind of just keeps us as that neutral third party. But I'm sure talking through that with a Larry Keller, or you work with Michael a lot, right?
Yeah, Michael Relvis.
Yep. So we'll probably have some good guest episodes where we can get into that. But for now, we'll kind of keep it high level. We'll get into some details, but on where it's important, especially in that, hey, you just match, or if you're listening to this anytime in your training, I try to give that teaser at the start, and we'll build on this. But to me, the most unique opportunity in disability insurance for all physicians is that GSI, that guaranteed standard issue policy. I hype this up as much as I can. I'm going to speak in Dallas in a few days here, and my first disability note, it's always GSI. It's vital for a lot of reasons. I always say in particular, it's very important for our female physicians because this is where we can lock in unisex rates still. And that'll start to change, unfortunately. We're going to start to see more and more providers pretty much go into distinct sex classes, which that's important because disability is expensive. Unfortunately, it's more expensive for female physicians. I'll tell you what I tell all of our clients, that I don't know if this is real or not. But someone once told me, someone heard this from an underwriter, and this would be another good one for Michael or Larry, but that women are more expensive. Obviously, we know of because of some of the underwriting items, but they said it's because women are more proactive with their annual checkups. So women are more likely to have something diagnosed to them sooner because they're smart, they're proactive. So it shows in their medical records. We're males, we're goofballs, right? We're just like, I'm fine, I'm never gonna die. The next day, massive, we're out of here. Like we're done. So they said, like, the reason why underwriting for females is more difficult is because they're just smarter. They're more proactive and they're getting checkups before, where us males, we never want to go see the doctor and, nothing's wrong with us. We're fine. We'll figure it out. So we have nothing in our records where it's a little bit easier. And I know there's other reasons in there too, but bring it all back to it's more expensive for female physicians. So if you can lock in that unisex rate, it's a huge savings, and you get to keep that base policy forever. And likely you're going to add in a future increase rider on that as well, which then you can build on that policy. And we'll kind of go through those details in a minute here. It also removes medical questions. So if there is any blemishes on your record, that's removed. If you're sitting here, and you're listening to this as a male physician, while the unisex rates are not going to benefit you in the same way it does a female physician, but you do get that, no underwriting where you're just, hey, if anything's blemishes on there, you get to walk right past that. So GSI is really unique. Keep in mind, GSIs are usually, there's only one person that can sell them for your program. And not every program offers that. Not every program offers them, which adds more complication to it. Larry sent over a list before that we try to reference as much as we can. But the GSI, to me, in all the disability questions a physician has to make, that is one of the biggest wins I think a physician can lock in those training years. There's a lot in disability, but what would you add to disability in general? But more importantly, what are your thoughts on that GSI policy?
It's very important. Yeah. If your program offers a guaranteed standard issue program for disability insurance, you should take advantage of it. If you apply for a policy on your own that's outside of the GSI and you get denied because of some health issues, many GSIs, they accept everybody except people that have been denied by a disability insurance company. And so you could end up not being able to get the GSI if you went and tried to get your own policy first. So this is really, really important because the moment you match, you all are, if not already, you're going to be getting emails and LinkedIn DMs and phone calls and text messages and Facebook requests from friends that you went to high school with wanting to get in touch. You happen to work for Northwestern Mutual now, and they just want to catch up with you. They've got all sorts of things that they want to sell you, and you got to sift through all these sales requests. Man, I just got myself all mad. All right.
There's name dropping.
Oh, no. They know it.
Yeah.
They know it. And I do it all the time. It's fine. So no, but
you're right though.
There's good people there. All right. But here's the thing. You want to protect yourself. So yeah, like ask people at your program, ask your program director or ask people in HR, hey, do you have a guaranteed standard issue policy program? Do you have a place where you have GSI info? I recently posted like a list that I got from Michael actually on my website. I have a resource page at olsonfp.com.
Okay.
So there's it's a big list. So it's very long, but there's you could check that out if you want to, or you can, find us if you message us through the Google form. We might be able to come up with some more like resource information that we could share on the YouTube page that could be useful to this end. What do you think?
Yeah, we can put your link in the show notes for sure. So that's an easy one. We just have a huge list from Larry. Yeah, I mean, I love the energy, and I could not agree more with what you just said there. But also, like, there's also some providers that are on very renowned list through very popular physician bloggers that you could apply at some of these places, and they are not going to tell you about a GSI. They're going to sell you anything that gets them a commission. And while they're always good people, and you need disability, I'm never going to argue that. But remember, if they don't ask you the proper questions and they just fill out an application and throw it in, and you get denied because they didn't take the time, I'm sure, again, Michael does the same thing, but Larry does a complete separate interview before he'll ever take an application for you, because he knows that if something would ever go wrong there, and then you get denied, and this is, not even a GSI policy, this is even later, that you're in trouble for a long time. You have to disclose that forever. So just remember, like, if you get into a system, you type in some information, they give you 12 different quotes, but no one ever actually took time to see, what your history is, that one issue could ruin it forever. And if you think, how will they ever know? Unfortunately, the only time they're going to probably find that information out is once you're disabled and you apply for a claim, and then they start to do their due diligence. So when you need it most and you didn't disclose that you were denied before, now all of a sudden that policy is not viable. So it's not as simple as like, they'll never find out. Like, they will find out. And that's where you just got to be smart. If you're thinking you should have marked yes on an application, but they said no, just mark no, they won't care about it, that's a giant yellow flag that you might want to get a second opinion, might want to just check out some other options in there. But, the GSI to me is a huge value add. And I wrote down another note as you were talking there too, Tyler, on, whenever it's affordable, the one thing we see quite a bit, if the only way that policy is affordable for you is by using something called a graded premium, which this will start your premiums lower and it'll slowly increase them as you get older, and as we assume that you're making more money. That is fine. But please, for the love of disability insurance, put a little Google reminder on your calendar that says, hey, I'm an attending now. I want to make this a level premium. Because the longer you keep that as a graded premium, that policy is only getting more and more and more expensive. So just put a little reminder in there. There's so many things going on. That's probably the last thing you're ever going to remember. We've had so many attendings, 3, 4, 5 years in attending, and they still have graded premiums. They said, oh my goodness, I forgot to do that. Just put a little Google Calendar reminder on there. But I couldn't agree more, Tyler, on get it in place. If the graded premium is the only way you can do it right now, just put a little reminder in there. But the GSI is it's huge. It's a really big benefit to have.
And I have a comment on how to find the right way to get such a policy. Obviously, you and I know, like Larry and Michael, and there's a few others that we know that do great work.
Yeah.
But there are many good agents out there. What you want to find is someone that is going to take the time, like you mentioned, to go through a proper health history evaluation before submitting an application. And secondly, you want them to be an independent agent that is capable of selling you policies from the following 5 companies: Emeritus, Guardian, MassMutual, Principal, and the Standard. You want them to be able to offer you any policies from any of those companies, and that they are not what we call captive agents to any particular company, because that way they are and should be compensated for their work through commissions when they sell you a product. By being independent, they are more focused on meeting your needs because they don't have someone telling them which company to sell. So ask them these questions. If you get, if someone comes to your program and is like, hey, we sell disability insurance, ask them, do you have the freedom to sell policies from all of those 5 companies? And what's your process for getting someone an application? See if they talk about getting health history. See if they're going to take the time with you to get it done right. And see if they say first, well, does your program have a GSI?
Yeah.
That's a green flag. That's a good sign. So look for those sort of indicators.
Yeah. And it varies by state. I mean, there are certain states that it could be better in, Illinois than it is Pennsylvania. So that's how specific it is. I mean, it really comes down to state by state. One of the things, in full disclosure, we used to sell disability insurance and term life insurance. Now we haven't done that for, I think we're coming up on 4 years now. And one of my defining moments was when I reached out to Larry. Larry could get pretty much discounts anywhere because, Larry just does a ton of volume. But we had a client that was on Visa. And I didn't realize that when a client is on Visa, pretty much the only provider they're really looking at is likely Guardian Berkshire, because if their Visa does not renew or something would happen to it and they have to go back to their home country, that's the only provider that continues to keep paying. So it got down to that level of detail. And I'm sitting here thinking, like, I have my 5. At that point, it was 6. Ohio National was still in the mix. And I'm thinking, I know disability pretty well. I didn't know it to that level of detail. And that was my defining moment on, and I always joke, like, underwriting insurance is kind of a pain in the butt. Like, it's a lot of work, all the individuals that do that, they do earn that commission. Believe me, it's not that simple. But that was my moment where I was like, there are other people that are way smarter, that are always in the weeds for just disability or just term life insurance. But I always like to use that story because that's how specific disability can be. And, as Tyler noted, like, those 5 are all the true ONOC. That's what you're really looking for, that true ONOC policy. And remember, like, the GSI, if you've never applied anywhere else and you were never denied, the GSI, you don't even have to worry about any of these health questions, right? You can just go get it. But if for some reason you want to exercise caution, now, if you're outside of your training years, and keep in mind, most of those providers will also give a little bit of grace period. So you might still be able to get a GSI for a little bit after training. It doesn't go very long in there, but just keep that in mind too. So if you don't pick up on this podcast episode until June or July, you might still be able to sneak one in, but you got to check quick. And while we noted, we'll put some show notes in there on the list. The other simple resource, check with HR. HR should know if your policy or if your program has a GSI policy. That should even be, a very simple option for you if you have a good HR team there to help you.
Yeah, good stuff, Chad. Yeah, I love what you shared. I'd say that's about enough for today. Yeah. There's a lot to digest. We hope that you'll find this helpful in terms of like emergency fund planning and disability insurance decisions. We got plenty more to talk about, so we'll just keep rolling with things like moonlighting income in the future, tax liability relative to that, and delving into investing and all sorts of stuff in the coming weeks. So yeah.
Please keep dropping us ideas as well, because that's where we want to make this as much interactive planning as we can. So you send us the topics, Tyler and I will build on them. Like we said, the first few episodes, we kind of had our idea of really focusing on that post-match just because of the timing of us releasing the podcast and the YouTube channel. But drop us comments, put things into our Google form through the website, and we'll also get in there and really build these agendas around you and what you want to hear. So make sure you're still thinking of those topics and sending them our way.
Very cool. Nice discussion. I'll see you around, Chad.
All right, Tyler. Thank you. See you on the next episode, my friend.
This information is for general purposes only. This information is not intended to be a substitute for specific professional, financial, or tax advice, as individual concerns vary. Please see a financial professional, CPA, and/or an attorney in regards to your own individual situation. Wealth Heals advisory services and financial planning offered through Vicus Capital, Inc., a federally registered investment advisor. Olson Consulting, LLC, offering advisory services and financial planning, is a state-registered investment advisor.